Okay, good evening, cohort 16. Today is another day in class, and our numbers are not impressive yet. So please, I encourage you to remind your party members that classes have commenced. So I will give us 5 minutes to mobilize our colleagues, and then we will commence. Once again, good evening, and I'll see you in 5 minutes. Okay, it's 5 minutes after 5. Our facilitator is already in the room, so we will commence immediately. Good evening, ladies and gentlemen. My name is Jessica Daniels, and today you'll be learning about understanding the role of tax in governance. Understanding the role of tax in governance. And this course will be facilitated by Mr. Joe Mijinyawa. I am going to take the next couple of minutes to read his profile. So, Mr. Joe Mijinyawa is a Nigerian born in Zaria. He started schooling in Zaria, Kaduna State, and proceeded to Ilorin, Kwara State. Later, he studied sociology at ABU Zaria and did his NYSC in Enugu State. He worked at First Bank of Nigeria PLC for over 12 years. He is currently an ICANN student member. He is also a member of the Nigerian Institute of Training and Development, NITAD. Joe is passionate about good governance at every level. He enjoys reading, teaching, and engaging in meaningful conversations. Without further ado, join me with a virtual round of applause as I hand over the virtual mic to our facilitator for today, Mr. Joe Mijinyawa. Good evening, sir. You're welcome.
Good evening, Jessica. Thank you for having me. Good evening, everyone. Are we set for the class today?
Certainly, sir.
Okay. So, Jessica, are you sharing my slides with them, or?
I think the DED is on that. I think the DED will share it shortly.
Okay. Okay.
Yes.
All right. So, ladies and gentlemen, good evening. I want to sincerely appreciate the Electoral College for giving me this opportunity to share with you the little knowledge I have of taxation. I'll be speaking to you about understanding the role of tax in governance, and I hope as aspiring politicians and political leaders in Nigeria, this little piece will add a lot of value to what and how we think about governance. Basically, I would start by a little introduction, telling you about what tax means in governance, rather, what tax means in governance. So basically, we'll be looking at it as it is your source of revenue. So when you're in the position, you're in a government position, for instance, either as a governor, a local government chairman, a president, whichever level you find yourself, there is likely to be the need for you to raise revenue. And it is by revenue that you'll be able to run the activities of the office which you hold. One of the ways of generating funds is through tax. Now, tax is a compulsory levy imposed by government on its citizens in order to ensure that it makes the best out of the revenue it gets, and also to ensure that basic amenities are provided to every citizen of that constituency. So, priorities of government, of course, you would agree with me that even the current government has been making a lot of changes in order to see that it is able to realize a lot of revenue as a result of taxation. Many of you will be on the viewpoint that it's unfair, is this, is that, but I would try to expose you to some of the things you need to understand, because at this level, I'm speaking to you not as the common citizen, but as a citizen that has the prospects of handling and manning leadership positions that would take you to the next level and take our nation to greater heights. The objectives here, I would say, first of all, would understand the reasons of tax and taxation, the need for government to collect taxes, who should collect what tax, and the basic principles of taxation and sources of our tax laws in Nigeria. I've already spoken about what tax is, but I will give you some highlights from certain sites like the Oxford Advanced Learners Dictionary, which defines tax as money that you have to pay to the government so that you can pay for public services. Another one speaks about it as a monetary charge imposed by the government on persons, entities, or property levied to yield public revenue. Tax can therefore be described as a form of levy imposed on all the residents living in as well as non-residents doing businesses within a tax jurisdiction. It is a civic and patriotic responsibility of citizens to pay taxes imposed, which also come to the government as income or revenue yielding device to finance the provisions of socioeconomic as well as infrastructure amenities and also to enhance industrial efficiencies. I would say that you should note also that the process of levying and collection of tax from taxpayers is known as taxation. You would understand, you agree with me also that governance is about monitoring and controlling decisions as well as giving leadership and direction. It's also concerned with who has the power to make decisions for the country and how power is used. So for what for the way they govern their states, these are questions that always come up when we speak about governance. Now, we'll look at taxation in the case of Nigeria. Hello, am I audible?
You are, sir. We can hear you.
Okay. So we'll talk about a brief history of the Nigerian tax system, which dates back to the pre-colonial Nigeria, where we have the North having emirs, the Southeast having obis and all that. We have also the Yoruba having the Obas. They have various monarchs, and sorry, I'm not trying to be ethnocentric or trying to undermine the other ethnic groups, but of course, every ethnic group had its own structure. And such structures had their own ways of generating funds from their people. So you would also know that like in the Hausa, where you have the Kudenkasa that was collected from those involved in agriculture. We have the Shuka also from the cattle-based people. Then we have the Ishakole, which is also a contribution for farm products as a form of land tax in exchange of the use of land for agricultural purposes. Owori, you see the Osusiamachiunku levied for palm fruits. So you would agree with me that it has always been there, that in every clime, either in the political, democratic, or the monarchical system, there are always ways in which revenue is generated so that you can be able to defend your territory, for instance, you can be able to provide the basic amenities and to ensure that people are having the best out of the revenue generated by government. Nigerian taxation in its present form is traced to the establishment of the British colony in Lagos as far back as 1861 and subsequent amalgamation of Nigeria in 1914, which we all are abreast with. And then during the colonial era, there was imposition of tax on citizens, individuals, corporates, just to ensure that they're able to raise funds to see how they can run the affairs of the various districts and provinces and regions, as the case may be. In order to achieve uniformity in the system of taxation throughout the geographical entity called Nigeria, the colonial government set up Raisman Commission of 1958. The commission recommended various introduction of uniform basic income tax and all that. This is basically history which you would be able to look at if the slides are shared with you. But generally, we'll also look at the objectives of tax. Basically, it's for revenue generation. It's been employed to raise sufficient revenue to satisfy the needs of the government, provision of defense, which I've mentioned before, law and order, health services, education, and all that. Revenue from taxation can also be spent on capital projects, otherwise known as capital expenditure, creating social economic infrastructure, and all other infrastructure that we need. It is from taxation that this is generated. It is used as a means for redistribution of income and wealth, where it is collected from those that have the halves of the society, and it is shared among all citizens equally. Because I won't say that if, for instance, government collects revenue from Dangote, it will not give to the least citizen. Of course it will, because the road constructions, the defense we have, the education, the health facilities are all used for every citizen. So it is a means of redistribution of income and wealth. We have the management of the economy, where certain goods are levied so that those that are using those goods, which are seen as luxury goods, are being the tax from there is being used to share among all citizens. In Nigeria, the government oftentimes introduces tax incentives and attractive tax reliefs as a result to woo and induce local and foreign investors. So it's been used as a means of encouraging businesses to come up. Like I think as it is now, for those that are into carbon related, the green economy and all that, they have some tax incentives. And then if you have any new business in the solar business, solar industry, there's a way the government appreciates such businesses and reduces their tax basis. Also, those in oil and gas, they have their own kind of reliefs that are given just in order to ensure that people are able to contribute in that industry. It's also used as a means of harmonization of economic objectives, harmonization of diverse trade and economic objectives of different countries can be achieved through a good tax system. For instance, the tax system can be employed by member states of Economic Community of West Africa, ECOWAS, so as to achieve a philosophy of a single market, free movement of people and goods within the region. Finally, taxation is a device to improve gross national income, induce economic development, and influence favorable balance of payments with other countries. Now, we have the principles of taxation, where Adam Smith, 1776, put up certain characteristics of a good tax system. He spoke about equity, which shows about the truth that thus the rich should pay more while the poor pay less. So it's about equity. The more you earn, the more you pay, and the less you earn, the less you pay. Then there's certainty. People should be able to know the time of payment, the manner of payment, and the amount that should be paid. And I think Nigeria has actually tried in that climb with the introduction of the tax pro max by the Federal Inland Revenue Service and the um, various other innovations by the state's internal revenue services to ensure that people who pay taxes are able to understand what they are expected to pay, and it is not vague, and it's not something like rocket science. It should be convenient, and that's why technology is being used by the various revenue services of Nigeria to ensure that people can conveniently pay their taxes online. Administrative efficiencies, simplicity. People should be able to understand it in the simplest manner, in the simplest way possible. It should be productive. The tax system should be such that brings in sufficient revenue to the government. The cost of administering such taxes should be less than the revenue, such that tax will be generated. So generally, looking at the collection as it is in Nigeria, you shouldn't say that, okay, we're going to employ consultants, for instance, to come and collect our taxes when the consultants are charging you a whopping amount. So it should be such that the cost of collection should be as minimal as possible so that people are encouraged and people also know that whatever they contribute is given to government and is used judiciously. There's flexibility and stability. It shouldn't be such that it's so rigid that when you say you have a peculiar case in your business, the tax laws should not be able to accommodate such. But I can assure you that Nigerian tax laws, as it is, are as flexible as they should be, as it allows for certain ambiguousness in businesses. Because even if we're in the same line of business, we all have our separate ways of running such businesses, and the tax laws appreciate such differences and accommodates people to be able to pay their taxes accordingly. Now we'll look at the type of taxes. There's the proportional tax. The form of taxes a taxpayer to pay a flat rate. So you can say, for instance, if in the past, companies' income taxes was on 30%. So whichever category you fall in, you're paying 30% of whatever income you make. And of course, when I mean income, taxable income is usually the net after all allowable expenses have been taken out. So I want to disabuse your mind from saying that if you make a profit of 50,000, it doesn't mean that the government will slash that 50,000 at 30%. No, there are certain expenses that are allowed within the law that allows that at the end of the day, in some cases, you might even declare a loss when your tax is computed. You know, there's a difference between tax computation and accounting computation. So your accounting computation, your statement of financial position can say that, okay, Oga has made 500 million, for instance. But by the time you compute it for tax, because of certain differences, like in accounting, they might be speaking about depreciation. But in taxation, they will tell you it is capital allowance, which has a particular calculation. So that might give you a reason to reduce your income such that what you pay as tax will be something you can smile at and say, oh, wow, after all, this is negligible. So we have the progressive tax, form of tax that is graduated, like the personal income tax. Some of us that are salary earners, I know that people still complain, but I pray that the new tax bill is approved and signed by the president so that some of these reliefs will come to us all. It allows for pay as you earn. So it's graded in such a way that for a particular amount, there's a particular percentage. As the amount increases, the percentages increases And so it goes. And that's why it is called pay as you earn, payee. The regressive tax, under this type of tax, the tax payable decreases as the taxpayer's income increases. This type of tax is not commonly applied, but in the books, you will find it. But in reality, I doubt if there's any kind of climb that uses that. Then there's another form of classification where you have the direct tax and the indirect tax. The direct tax speaks to our ability to pay taxes directly on our income, like the personal income taxes, the company's income tax, the capital gains tax. I will just speak a little bit about the capital gains tax. Sometimes there are some taxes that, if truly they apply it on us all, I assure you that Nigerians will be like, waiting now, waiting happen. Like the capital gains tax, it's on our properties. If you receive gift, for instance, from someone, let's say your uncle sends you $1,000 from America, and you decide to go to the market, you bureau the change, to sell that $1,000. You know that you did not actually purchase it, but it was gifted to you. Now, you are now selling it at the black market at a very high rate, of which we know that the official rate ordinarily, probably, let's use 1,500, but you're selling it at 1,750. That extra that you have made, do you know that the law stipulates that such amount is supposed to be taxed? It's supposed to be taxed at 10%. But that's a story for another day. We'll discuss about that. We have the tertiary education tax, the petroleum profit tax, which is applied directly on the income of such businesses. Then the indirect taxes, where you have VAT, value added taxes, it is not direct. You don't feel it. For instance, when you buy a bottle of Coke, or you go to a club and you buy a bottle of a drink or something, or as little as the Coke you're buying, you have paid tax, but it does not hit you directly because the VAT has been included in the price. So you just say, madam, how much is Coke? She say 150. You just give her 150 and you step away. But inside that 150, tax has been computed. We have the stamp duties, which is on agreements. Basically, some of us go to our businesses would take us to the bank where we take loans. On such agreements, stamp duties apply. Also, for those into stock exchange, when you do those exchanges in companies, you buy stock and all that, stamp duties apply. So these are indirect taxes that you don't feel the effect directly, but somehow it has been taken. Excise duties, custom duties. You buy a car, for instance, from somebody. The car dealer tells you, okay, the car is 1.7. And you're like, okay, no problem. Reduce for me now, 1.6. He will agree. But he has already paid for custom duties, which is already part of his costs. So he's just selling to you and making profit out of it. You don't feel it because you're like, this car fine for 1.5. Don't buy the guy. But government is happy. You have paid the customs duties, and that is how it works. So indirect taxes may affect the cost of living as they constitute taxation on expenditure. So that's why some people will be talking about that they want to increase VAT, for instance. They want to increase VAT to 10%. But on the other hand, there's a way the government has worked it around such that you would not feel it because they have changed the rates for the personal income tax. So if, for instance, you are paying an amount as tax from your salary, and your salary falls within that range that is going to be 0%, you might not be paying that tax. And so that is why they've shifted it. Since you're not paying it at this at this end, you still pay it at the other end, which is VAT. So in position, when you find yourself in position of governance, for instance, these are things you need people to advise you on if you're not too knowledgeable about. And this is not something you should use to say, okay, let's pity the people and let them not pay taxes. Oga, madam, how do you generate your revenue? If you do not raise these funds from these little taxes, how do you want to govern your state if you're a governor? How do you want to govern your local government if you're a local government chairman? And there are certain taxes or levies, I would say, not taxes, at the level of the local government. It is fines, and you have fines, you have levies. Those are the things you will need to implement to see that, okay, this is how I generate these funds, and this is what I will be using these funds for. Now we'll look at the tripod of taxation, where we talk about the tax policy, the tax laws, and the tax administration. So the tax policy speaks about how these policies come about. You have different tax policies that are put together to ensure that taxes are collected amicably, like the movement of emphasis from income tax, consumption tax, that is less, the pursuance of the tax law regime, the aim of reducing individual tax burden, introduction of the self-assessment, like I mentioned earlier, the tax pro max that the FIRS brought in. It allows you to pay your taxes at the comfort of your bedroom. You're in your office, you're in your room, you just download the app, do your registration, put in your details, put in your figures, and it is expected that in this case, the government has given you that trust that you would tell them as it is. So when you do that, you do your self-assessment, you pay your taxes, then you take your receipts to the tax office. And the tax office has, within the law, the powers to audit your books. So they might come and say, Oga, you have told us this is it, but we want to see it as it is. These things you have written, where are the supporting documents? And so they will request for your documents, look at it. These are all ways to ensure that that trust is not betrayed. And so it is not as if it's punitive, but it is expected that since the government has given you that option to say the truth, they want to be sure that actually, yes, the truth has been stated. Then the tax laws, there are quite a number of tax laws that back the legislations that back our tax laws. All the different types of taxes are backed by the law. And that's why this current tax bill that has been sent to the Senate is because they need them to assent to it so that the president also assents to it. And at the end of the day, it becomes a law. And so you have the personal income tax, you have the company's income tax, you have the capital gains tax, you have the value added tax, education tax, stamp duties, and also you have the hydrocarbon tax. So all these are backed by law. So when you have the tax policies, you have the tax laws, and then you will now move on to looking at the tax administration. So in terms of tax administration, has to do with the practical interpretations and application of these tax laws. What are the bodies charged to do the collections? You have the Federal Inland Revenue Service, you have the State Internal Revenue Services, and you have the Local Government Revenue Committee. These are saddled with the powers to administer those laws, to ensure that taxes are collected as they should be, so that the government at the end of the day has the actual amount it has budgeted to collect, and so that it can actually run its affairs as it should be. These tax laws have their own sources. From time past, we have the customary laws, which I've spoken about, the traditional days, where you have the Osusunku, Ishakole, you have the Zakat, and all that. We have also the statute laws, like I mentioned earlier. tax legislations like the personal income taxes, the company's income taxes. We also have case laws where, based on judgments passed by judges at the Supreme Court, at the Appeal Court, at the High Courts, based on that, like the case of VAT on water, for instance, ordinarily, water should not be vatted because people must drink water. It's a basic necessity that is natural for people to feel thirsty, it's natural for them to drink water. But at the same time, it has been packaged. So based on that, there was a particular taxpayer that sued the Federal Inland Revenue for charging him to pay VAT on water production. The case was there. At a point, it was dragged for a very long time, but at some point, I think that guy won that case. Now, the issue is this. If water in its natural form is sold, who will drink? Would you go under the tap and put your cup and then they'll tell you 5 naira and then you drink it? No. It has to be packaged. And based on that, that is why it is called value added tax. So for those that would go to a restaurant, for instance, eat akpu with vegetable soup, VAT should be charged because what? A value has been added. The ambience you have gone to sit in, there's something that has been added. Okay, you decide to sit at home. You now order for it online. There's still an added value because all that transaction has happened on another kind of platform. And so because of that, VAT should be taxed. So as one who is aspiring to go into governance, for those already there, your line of thinking should be such that how do we generate more funds for government? How do we ensure that we are able to generate funds that we can use to run the government in a very, very legitimate, convenient, and open manner, such that the citizens are not strained, but at the same time, they're able to do to pay their taxes as it should be. Now you have other circulars, you have budget pronouncements, you have the Constitution of Nigeria, which all serve as case law, as sources of those tax laws. In conclusion, we should note that taxes are collected in order for the government to have adequate funds to run the affairs of the country or state, as the case may be. For the government to be able to defend her territories, build infrastructure, and also ensure that its citizens, civil and public servants are adequately paid their remunerations, tax should be involved. As such, in governance, we must know that tax is of utmost importance and must be collected by government. It should be noted also that payment of tax is a constitutional duty of every citizen, and everyone should abide by this. As the saying goes, give unto Caesar what is for Caesar, and unto God what is unto God. Thank you very much for listening. I'm open to any contributions, gray areas, questions. I'm available. Thank you very much.
Okay, thank you so much, sir. Thank you for the insightful session. It's been educating and, of course, definitely insightful. So I'm taking it over from Jessica. So if you're in the class, you're present, you have any questions, you can do well by indicating by raising up your hand. And if you cannot speak, you can use the chat box and drop your questions there, and we're going to read them out. So if you have any questions, you can just indicate by raising up your hand, and I'll ask you to unmute yourself. Okay, Ibrahim. Ibrahim, you can unmute yourself and ask your question.
Thank you, madam.
Okay, sorry, Ibrahim, before you go, please, let's remember to keep it short. Others are waiting, right?
Okay.
Just go straight
Okay,
to the
thank you.
point and ask your question. Thank you.
Okay, thank you very much, madam. I wish to congratulate the presenter of the paper for a job well done. And my question is that, recently there is a recent happening in this tax law presented by the executive arm of government. And there was some challenges. There was some problems. There was some problem from other part of the country, especially from the governors and we the electorate. In your own opinion, why do you think that this should happen? Because in my own opinion, I think that the bill has to come from the legislative arm of the government, not from the executive arm of government, because the legislative arm are representing the people, They are supposed to know when they are supposed to know the implication of reviewing the tax. What I mean is that why shouldn't the legislature present the proposal instead of the executive arm of government? That is number one. And number two, why do you think the governors opposed the proposal? Because some of them were saying that all these taxes should be collected, should be centralized in one state, especially the Lagos state. Because all the headquarters of the banks and other industries are concentrated in Lagos. So the tax, when charged, it will be deposited to the Lagos, and then the Lagos state will earn more. They will get the more share instead of the other state. Thank you very much, sir.
Thank you very much, Ibrahim Jari. First things first, like I mentioned, at every level, as you find yourself in governance, you are expected to see how you can generate funds. And instead of the government relying on debt, they're trying to see how they can close up the gap between revenue generation and debt. And most of this revenue we generate is not even enough to run the government, because as it is in Nigeria, we're highly indebted. And so that is why the president naturally will take responsibility and institute a tax committee to see that, okay, guys, what do we do? How do we come out of this our situation? It's a messy situation, I can assure you. Now, if you understand public sector accounting, it has a lot to do with how the government generates its funds and how it spends. So they must be able to say, okay, as the president, for instance, he cannot sit down and say, okay, legislation, well, go and meet your people. No. These tax laws are backed by the Constitution as it is. Not just the Constitution, tax legislations, and even judicial judgments and all that. And so it is not actually totally constitutionally wrong for the executive to come up with it, because we have what we understand as the three arms of government. And so just like they pick from judicial precedents, the executive will now present to the legislature. Legislature is supposed to go back and see their people and say, okay, well, this is what is supposed to come in. Now, how do we come in? Where do we make adjustments? Where do we allow? Where do we not allow? Where do we contest? So it is not the primary purpose of the legislature to say, okay, we're the ones and we have decided that these are the tax laws. That no. Tax is under the executive. Take it or leave it. It is the executive arm that would decide the kind of taxes and how they go about the administration. Now, certain states are saying, yes, if it is generated from us, we should be able to have it. No. But if you look at the new tax bill, for instance, I would use the telcos, for instance, to say they are actually saying that if I make call in Katsina, for instance,
yes,
Katsina state should take the VAT from that call.
That's my state. Okay.
Okay, Toll. I just picked
Yes, I'm
an
from Ghana,
example.
sir. Yes, yes, yes.
So I
Thank
know
you very
that
much for the example.
at some point, Zamfara state government was even going into a form of forensic audit on all their masts, all the masts in the state, to look at the volume of transactions that happen on via each mast, so that they can claim their revenue from those telco companies. So as it is actually a good thing that every state, for instance, if Lagos is saying they have banks, fine, enjoy the banks. Somebody in Zamfara should be able to say, okay, if you are coming into my state, as little as Balangu, as little as, we should be able to impose a tax that the person buying that Balangu should pay a tax on it. Or Kilishi, the moment you are traveling from Lagos, going to the north, they tell you, bring Kilishi for us. But is Kilishi taxed? But there's a lot of money that goes, a lot of money exchanges hand in that climb. If you look at palm oil production, you would see that there's a lot of revenue that is being untapped. And I want to also encourage you to think not as a common citizen, but as someone who is aspiring to be in governance, and look at it from the aspect that, oh, if I am today the governor of Katsina State, oh no, if I'm a local government chairman of my local government, how will I raise funds to run my local government? You don't have to wait for allocation. You don't have to say, okay, we're waiting until they do FAC allocation. That is when I can do culvert, for instance. You should be able to say, okay, every bicycle should be registered in my state, in my local government. Every bicycle owner should pay a certain levy, because for one reason or the other, they're enjoying the roads, they're enjoying every facility that has been provided. So there should be a give and take. So for me, it is a call on all in governance to ensure that wherever you find yourself, either at the federal, the local, the state level, think it out as one in leadership on how best to raise revenue to ensure that you provide and give back to the society what has been given to you. That is my take on it.
Thank you very much, sir.
Thank you, Ibrahim.
Okay, thank you so much, sir, for the response. Lake, is it Lakey or Lakey? You can unmute and ask your question.
Okay, thank you, presenter.
Thank you.
My name is Lakey.
Okay, Lakey.
So my question goes like this. Last year, I got a letter from the tax office, and when I read the letter, they told me that to come and pay my tax, or they would use the law against me. So I went to the office, and when I got to the office, I told them that, see, where did you get my company from? They said they got it online. Now I have a registered business on Gmail, on Google rather. And the business is, I don't take money. I just help young entrepreneurs to connect to businesses. They will call me or link them up. So I told them I don't collect money. So why will you expect me to pay tax? They told me that I should be collecting money from them. Now, this is the first question. Am I going to be paying tax when I am not collecting money just because you saw a business name on Google? That is one. Then the second point is, most of the things you've highlighted is very important for each businesses. But in Nigeria today, I have seen that we don't really keep our bookkeepings. I'm talking about accounting bookkeepings. Most business, even myself, I will be very candid. I can't remember the day I have looked into my account statement, my profit, my loss, and all those things. So I think, awareness and education and enlightenment is important in this angle, sir. What is your take, sir? Thank you.
Thank you very much. First things first, you said you got a letter from the tax office. Was it the state or the federal?
It was at Usetu, the state.
FCT IRS,
Abuja,
right?
Abuja.
FCT IRS, not FIRS.
Yes. Yes,
Okay.
FCT.
Okay. So now, I think part of the problem we're having is also the time of registration. When you go and look at your CAC certificates and you look at your MEMAT, memorandum and article of association and all that, you would look at it and know that it is probably, I am not certain because I've not seen it, but please go back and look at it. Probably it is meant for profit. If you register your business not for profit, nobody will tell you to pay your taxes. And that is why I would now go to your next agenda, which is about talking about the bookkeeping and all that. I know some time back, even recently, on this new tax bill, there was a very open session on channels, on national television, telling people about, people were opening up. It was like a town hall meeting on the new tax laws. If I'm not mistaken, it's not up to a month ago. It is there for you to get enlightened. And some of these things, if you even browse about them, it is there for you. I, for one, as an accountant, we are not so many, but we try our best to advise when possible. Bookkeeping is not negotiable. No matter what it is, even in your personal life, if you don't do bookkeeping, you're in for it. Because that is the only way you'll be able to know, okay, how do I save? Or how do I save better? If you are saving, inflation is not smiling at you. So you need to save better. So bookkeeping is not even supposed to be an option. It is supposed to be part of your business. The fact that a woman selling akara should be able to know that I came out with 5,000, I came back home with 7,000. Write it down somewhere, even if it is on oil paper, provided you keep it. So that if anybody comes to say, hey, madam, how did you pay your children's school fees? EFCC can follow anybody as it is in this country. You should be able to account for your finances. So it is actually a very good thing to be financially literate, to be able to do these things and account for your expenses. Now, your line of business, it is possible in the tax laws that you have exemptions. But because you do not even file your books with the tax authority, you have every right to come to you. It is in the law. They are backed by the law to come and attack you, to tell you, bros, exactly. You have been doing business. And everybody knows that there is business going on online. And the new drive is for the tax authorities to follow such businesses. So naturally, they will actually ask you where, because, guy, to be very factual, even me now, I don't suspect you. Declare so that you can do us something.
Sir, but you know, sorry, sir.
Yeah.
But you know, the challenging part of it is that I have a registered business, but that very one is not registered. Yes. So I told them that this business is not even registered. They say it doesn't matter, in as much as the name is on Nigerian and network space that I should pay.
Yes. So let me tell you that naturally in the Nigerian tax law, that any income, how do they even put it? Any income generated within Nigeria or brought into Nigeria. Do you understand? So it is not just for you based in Nigeria. If, for instance, a British company, like all these airlines, where you have KLM, for instance, they collect tickets. People pay for tickets from Nigeria. That amount is supposed to be taxed in Nigeria. So they also remit taxes to Nigeria before they repatriate the balance to wherever they are going to. So naturally, once you are doing business within the space of the country, you are expected to pay your taxes. So as it is, you need to come forward, you need to go forward rather to the tax authority, show them all you have been doing and what you do. And then going forward, you are supposed to be rendering your tax files to them. Like for instance, NGOs are supposed to file with the tax authority. Even if they are not making profits, they should file and show their statement of affairs to show, okay, we received this grant and this is how we expended this grant. If you are not transparent, of course, that means there's something you're hiding and they will definitely come for you. So I would advise that going forward, you should ensure that you do the right thing so that you don't get harassed by the tax authorities. I hope this explains to you.
Thank you very much, sir.
Thank you very much.
Thank you so much, sir. So we have a question in the chat box from Yusuf Salihu. He's saying there's this challenge of double taxation and misappropriation of funds by some authorities. I guess that could hinder tax generation by the citizens. What is your thoughts on that?
Okay, I would think this is an overflogged topic in Nigeria today because the new tax law is actually working against the multiple taxation. However, when it comes to taxation, it is not a levy you pay in exchange for anything. It's a compulsory levy. So when you talk about misappropriation of funds, it actually sounds ridiculous to me because, okay, you have paid your tax doesn't mean that I should come and do the road in front of your house, because the priority of government is not necessarily your priority. So if I have insurgents, for instance, in Northwest, Northeast, as the president of Nigeria, and I take the taxes to buy arms, does that mean I'm misappropriating your tax or the revenue I have? So we need to understand the fact that there is priority in every level. I have made mention of, for instance, the local government, where the local government chairman should be able to raise taxes on market stalls and all those things. You have people who stand by the gate for every car passing with goods. They collect 10 naira, 20 naira. They generate funds. Those funds are supposed to go to the local government chairman. But does that mean that the local government chairman should come and put solar street light in front of your house when he has probably culverts to make for people to bring in produce from another angle of the local government? So we need to understand these things and be able to know how we direct our statements when it comes to misappropriation of funds. I don't know if I've actually gotten to the point of it.
Yes, sir.
All right, thank you.
Okay, so we have another question in the chat box. This is from Temitope Ogunlana. How do we get people to believe and buy into paying tax as a way to safeguard their future, in brackets, long-term development?
Okay. So naturally, you should be able to, that's why you have legislation, for instance, at the federal level and the state level. As the chief executive of a state, you should be able to come close to your people and understand what are the yearnings of the people. How do they react, or what are they thinking when it comes to infrastructure? Now, you have state governments that went ahead to go and borrow money. They've gone to borrow money, they've done infrastructure. How are they supposed to pay? It's from the revenue. So there are two ways to it. It's either you source for the funds, make available all you want to do, and then let the people pay for it over the long term. So maybe that is an incentive of an executive, for instance, in a state to say, okay, for these people to say, we are working, let us work ahead of time so that we encourage them to pay. But naturally, especially at the federal level, for instance, where you have corporates, the big companies and all that, there are different incentives that are given to them. I think as it is now, the taxes are graded into 0%, 20%, and 30%. That is already an incentive to encourage people to pay their taxes. If you do a turnover of less than 50 million, you don't pay any taxes. If you do a turnover of 50 million up to 100 million, you pay 20%. If you do above that, you pay 30%, which is fair enough. So I think it's just the fact that a lot of sensitization, a lot of knowledge has to be passed down, town hall meetings, all that. Those are the ways government would need to work hard. I won't say they are there yet, but they need to work hard to ensure that enlightenment and engagement is done so that more people appreciate taxes and understand taxes, and then they will start paying taxes. I don't know if that answers the question.
Yes, sir. Thank you so much for that. So we have the last question in the chat box, which is a follow-up question from the initial person with the non-profit. This question is from Mohammed Saleh Isa. He says, why is it that when opening an account for an NGO at a bank, even though the organization is registered as a non-profit, the bank requires the presentation of a TIN? Additionally, why do banks make monthly deductions on these accounts?
Okay, so for me, I will speak on one side of this. I will speak on the side of TIN. TIN is tax identification number. And like I mentioned earlier, non-governmental organizations are supposed to have they are supposed to register with the Federal Inland Revenue Service to present their statement of affairs, to show their activities and ensure that they do not do anything for profit. So that tax identification number is not for payment. It is an identification number. Just like you have NIN as an individual, your business or your organization should have a tax identification number so that when they pick it, they can see it and say, okay, this is a non-profit organization. This is their team. It's like an account. It's like an identification from the tax side. So that when you speak, they say, okay, this person doesn't pay, is not expected to pay taxes. Now, on the other hand, speaking about the banks charging them, Ogbeni, banks, I don't want to talk. I don't work for their tire. I don't lead them. The truth of the matter is they will tell you that for every transaction, there is certain kind of taxes to be paid. I'm sorry, types of charges. They have charges on these payments. However, last I knew, I don't know if they have changed those systems. For those kind of companies or organizations, there is supposed to be a special kind of account such that those payments are not taken from the account. It is open for contest. If you have such challenges, walk up to the bank. Let them understand that you have donors' money, and the donors are not expecting you to account for charges, for instance. So they should explain to you or give you a proper solution on the best way possible. That's my take about it.
Okay, thank you so much, sir, for the response so far. Samuel Obi, you can unmute yourself and ask your question.
All right. Good evening, everyone. My name is Samuel Obi. My question is, I don't know if when the tax expert, when they are about to formulate their tax policies or tax laws, if they're put into consideration precondition for certain taxes to be implemented. For example, in statistics, before you can use data for time series analysis, it must be data of up to 10 years at least. Now, I go to renew my vehicle papers every year, and I'm forced to pay roadworthiness. And most times, these vehicle inspectors officers, they will stop at the place where the road is not even good, is not motorable. They force you to stop and now demand that you pay roadworthiness on an unworthy road. So I'm saying, when the tax experts are formulating all these policies, why is it that they don't put into consideration, giving condition that before you pay for roadworthiness, the road must be worthy? So that at least people will begin to justify the way tax laws are being formulated. Because this one that you just say, I have to pay for roadworthiness, even when the road destroys my car on daily basis. I think I don't seem to understand that. Maybe there is a rationale behind that. I want a tax expert to explain that to me. Thank you very much.
Thank you very much. I'm not so vast when it comes to taxes at the state level, because roadworthiness is a form of revenue that is generated at the state level, where you have the VIO and then the other states appointed organizations. However, from what I understand, the roadworthiness is a payment for a service. And the service is, that's why they have this, their inspection center. I don't know which state you are in, but I think in Abuja, they have a center where you take your car for them to run diagnostic, some certain diagnostic measures on your car to ensure that it is roadworthy. It is fit to be on the road. It is not a risk on the citizens. So I think we're speaking on two different sides, because the road being bad, well, it is bad, but is your car fit to be on a road? That is the other side of it. So I think that payment is not particularly because the roads are good. No, it is because your car should be worthy of going on that road. For instance, it is not the road that will determine your brake pads. Your brake pads should be as good as possible. So as much as possible, that diagnostic, it's just that certain things don't work as they should. But I think, if I'm not mistaken, that payment is not for your car to be on the road, but that payment is for them to check if your car should be on the road. That's my take on it. I hope that explains it.
Yeah, I think it's okay. Though I was saying, when they are formulating those laws, shouldn't there be a precondition to it, so that those who are also receiving the tax will also have a responsibility? Because
Okay,
even if they, for example, my shock is good, can ply the road. But when I go to a trip, before coming back, the shock is bad because of the road. So I can also be charged that my shock absorber on one side is not good. Meanwhile, before I left for a journey, it was good, but because the road is not good, my shock is now bad.
I understand you, but I want you to understand that tax is not a payment for a return. I mentioned it earlier. It's not, you're not paying tax because you have a certain thing that must be done for you, but it is a compulsory levy imposed by a sovereign state on its citizens for provision of infrastructure and other amenities. So if the particular road you took is bad, it doesn't mean that the state has not provided infrastructure, and it doesn't mean that the state is not judiciously using its revenue. So that is where we should get it right. Thank you very much.
Okay, thank you so much, sir, for that. I think the last person we have here, the last question is Jesove. Please unmute and ask your question. I'm sorry if I mother your name.
That's fine.
Jesove.
Good evening.
Good
Evening.
Just Sove.
Can you hear me?
Yeah.
Loud and clear. Go ahead.
Oh, okay. Thank you very much for the in-depth lecture. Okay, I just wanted to comment on something where the brother talked about taxes on his business that is not registered. First, for you to call it a business, it means that it's for the purpose of profit making, because a business is an entity that renders a service and makes profit. But if it's a non-profit organization, then it should be registered as such and get the relevant clearance. Now, we live in a society where people try to be fraudulent. That's why under the Economic and Financial Crime Commission, we have the SCUMO unit, which is a special unit against money laundering. Because someone can just come and tell you that I run a non-profit organization, I transport food from the north to the east to the west and give to the less privileged, whereas these people are into other sources. So you are supposed to file for your SCUMO and get cleared by the EFCC, file to the FRS and let them know that, okay, I got 10 million naira in my account in 2024, and this is how it was spent. It was for the purpose of A, B, and C. Then they look at it and say, okay, these services you have rendered are not to be taxed. But if they are to be taxed, then they will tell you the appropriate tax that is adequate for that purpose. For instance, even in the manufacturing sector or any other sector, if you purchase an equipment used for any service within Nigeria where you engage Nigerians to work for you, the government have a special payback plan for you, which is called Certificate of Fixed Asset Acceptance. They give you
Yes.
a tax buyback. The government assesses it and gives you a particular percentage in the first year and break the remaining part of that equipment into other years. That doesn't now mean that, okay, because you bought an equipment which you use to employ Nigerians, you shouldn't pay tax at all. No, you pay the relevant tax. They file for the appropriate tax buyback as well. Then on VAT, I just want to make my last comment. Sorry if I'm taking so much time. On the VAT part, now the example you give on making call in Katsina, the new tax law is saying clearly that taxes will now be charged at the point of consumption, not at the point of production. Now, I manufacture noodles, for instance, in Abuja, and I sell to, let's say, Lagos. The man that is buying the noodles and cooking in Lagos, his tax should be paid to the Lagos state government and not returned to file in FCT. The ones that are sold around FCT should be paid to FCT. So that way, the state tends to get more income from these tax laws. I think the interpretation to our people is a bit blur, that they don't get to get the clearer message, because with these new laws, the states would get more. It's even states like Lagos, where they have headquarters of most companies, that should be crying foul at this time. Because, take for instance, the telecoms that have their headquarters in Lagos, calls across the nation would now be split to the individual units. Thank you. That's what I just wanted to add.
Thank you very much for that contribution. I totally doff my hat for you. You are very knowledgeable. I am sure maybe you are probably a lawyer or an accountant for you to have this in-depth knowledge. Thank you very much for that. I truly appreciate it.
Okay, thank you so much for your contribution. So I earlier said the last question, but I think we have the last one in the chat box, which I think we should attend to, and it will be the last we'll be taking today. It's from Usman Mohammed. He's saying, I established a business in 2019 and registered with CAC, but the business had only 1 year lifespan due to government demolition. That is, the business died in 2020. What should I do now with regards to tax? Because I've been trying to revive the business within these 4 years, but the economic situation hasn't been favorable.
Okay, so for me, business was established in 2019 and registered with CAC, which means business commenced 2019, and by 2020, I don't understand government demolition, because registering a business doesn't necessarily mean because a building was demolished and then the business crumbles. I totally don't understand the line of business, so I can't speak to that. But it means that this business obviously falls within the tax cycle of, if it is a corporate, a limited liability, it falls within the 0% tax payment. And if it is an individual, like an enterprise, for instance, the person is out of business now. Nobody will come after you because there's really nothing you're generating. So it's just for you to file with your relevant tax jurisdiction, either the state or the federal, to tell them your state of affairs. This is what I'm doing. This is why I'm not doing. And your statement of account should also speak to it. Because if you have a statement of account, for instance, that has inflow every month, but you're telling us that your business is not running, then you say it's your brother's money, they're sending it to you to pay somebody, they will tax you, tax on that money that has passed through that account. But if totally, sincerely, you know that nothing is going on, I think you should just step forward to the tax authorities and tell them how it is, and they will advise you accordingly. There's no issue that cannot be solved. So I think it's something you should do. And I will encourage you to also look at other businesses within your industry to see how you can tap into what they are doing differently so that you can apply to your business to see how you can revive your business. Thank you very much.
Okay, thank you so much, sir. And I think with this, we've come to the end of today's class. But before we go, sir, I'll give you probably, let's say 30 seconds if you can wrap up your thoughts and maybe you have some last words for us.
Okay, so I truly appreciate the caliber of people in this court. I love the intelligence. I love the kind of questions that were asked. They're quite challenging, and I think I also have some gurus in the house, which I give kudos to. And on this note, I would always want to encourage you that in as much as we are looking into where to govern or where to be a legislator or where to be an advisor or where to be an aide, you should think around how revenue can be generated. When they say, what are you bringing to the table? Your thoughts should not just be who you sell your posters to or where you post your posters or where you go to for campaign, but you should also be able to include in your manifesto, for instance, how you intend to generate revenue that will be friendly to your populace and how you also intend to expend such revenue that has been generated so that people will understand that, okay, this is what we're expecting and this is where we should look at to see how we can be able to, for instance, grade the performance of such a leader. So you should be open to both sides, where people will say, what are you doing with our money? And also where people will say, we have given you so much and we have seen what you have done. So as a leader in politics, you should be as open as possible for income and expenditure and how you can account for them as a good leader. Thank you very much.
Thank you so much, sir. It's always a pleasure having you. And of course, as a leader, accountability should be your watchword, right? You should be open to accountability. And again, thank you so much to everyone who has attended class today, being present in class today. It's always insightful and it's always knowledge packed. So as usual, please don't forget, you are not to keep this knowledge to yourself. Let's put it out there, right? Knowledge is important, and of course we talked about interpretations. So of course, if you're starting a business or you're paying tax, always try to seek knowledge from people who are authorities or people who know better, and then you try as much as possible to ensure that you understand this thing you're going into, right? So we have Didi in the house. I don't know if you have any announcements before we go. Didi.
Okay, thank you so much, Chris. Thank you so much, Mr. Joe. It's always a pleasure having you. Okay, so for the students, I just want to remind you that the deadline for submission of your project is next week, Wednesday. That's the deadline for the submission of all projects. So please take note of that. And your graduation will be next Sunday. You'll get more details before that day. But the one for the project is the one I want to bring to your attention. Wednesday is the last day for submission. So thank you all, and classes continue tomorrow. Thank you, Peace.
Thank you very much. Thank you very much.
Thank you. So please, let's not forget, we continue tomorrow. Our classes continues tomorrow, and please let's try as much as possible to be in class on time, right? We don't have to wait until 5 before we start reminding our colleagues, right? We can remind them on time, so we'll all be in class together. So thank you so much. Let's all have a restful night. Good night.